Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leader in pure technical analysis, avoiding all that Wall Street hype. Today, Friday, December 26th, 2008. Well, as we get into today's intraday video, folks, I want to discuss a little bit about what's going on in the market. Number one, I want to say I hope everyone had a wonderful day off yesterday from trading, as the Christmas holiday was yesterday. And anyone else who celebrates anything else, I do wish you all happy holidays. What I would like to talk about again today is not only about what the news is out there, what we're seeing in the markets, what the action is today, but also about the technical setups possibly leading us into the new year, and go over some different patterns, pricing, some time issues out there. Because we do have two turn date signals, one for the markets, one for spot crude, coming into play in January, and I want to release those in the Research Center. And by the way, those of you that do not belong to the Research Center, you will not find a better teaching tool than the Research Center, and a better market timing tool than in the Research Center. It comes with about 5 different services in that Research Center for only $49 a month. Fantastic value, never paralleled out there in the internet today. So go join. Number one, let's talk about the markets. What are the markets doing right now? And as I scan through the markets, I see the NASDAQ trading lower by 1.67 points. The Dow is up 10 points, and the S&P is up 2.75 points. So you're seeing a mixed market out there. The volume is extremely, extremely light. Talking about 115,000 contracts right now at 2:15 p.m. Eastern Time. That is pretty much the lightest I've seen all year, to be honest. A full day of trading under 200,000. A normal day is 3 million contracts. So for a day today, the whole day to trade 200,000, and we might not even get to 200 today. We might only get to 150 or so. That is really unbelievable and needs to be taken with a grain of salt. Now, one thing we always talk about is when you have light volume, sometimes you tend to get a little bit of a bounce higher or a float higher in the markets. We got that on the gap up today, and you can see you're looking at the SPY intraday 10-minute chart with the 20 moving average, the 50 moving average, and the 200 moving average. And what you can see here is we gapped up today. You had a nice little gap up, and not a big one by any stretch, but a little one. And you really traded sideways, down a little, bounced, down, so forth, into the 50 moving average. All right, so you basically hugged the 20. Now, those of you that are with us in the chat room, those of us that have taken a webinar out there and know the technicals of the charts, you guys know by this point that what you're seeing here is a downward motion, bear flag, downward motion, bear flag, downward motion. And then what you saw here is the market hugging the 20 moving average for an extended amount of time, creating another bear flag pattern. And notice that bear flag pattern before it broke lower again into the 50 moving average. Now, what are you seeing again? A possibility of a bear flag pattern developing. The other thing I want to point out here is that you have to use the charts to the full advantage of the charts. Meaning that one thing that I drew in on my chart this morning and figuring out if the market were to come down, where it would go, what did I do? I connected the low from Wednesday to the low here put in on Tuesday. And what do we get when we do that? Let's draw that in. Okay? So you have that line really coming right into effect here, where you can see that not only is it hovering along the 50 moving average, but you also see right here a hit on the chart, and right here. And by connecting those lines, you generally know that the market will come into support right at that line along with the 50 moving average. When you have two support lines focusing in on one area, it's a fair bet that if you're going to go short the market up here, like some people did out there, then that's your area to cover right in this area on this first hit. Not only are you hitting the 50, but you're hitting the connection of the trend line going back to 2 days ago to a day ago of trading hours. Obviously, dealing with trading, we weren't open yesterday, so that would be the day before. Okay, folks, so watch that, understand that, and use that to your advantage. Find as many support lines, trend lines, moving averages, any other indicators. Gap fills are another one. And the other thing I'd like to point out here as well. So not only do we have the 50 moving average, okay, so here's your 50. So you know you're going to have double support right here, but notice gap fill. Draw a straight line over from gap fill. What does that bring you? Right into there as well. So this line is extremely positive support. Now, it doesn't mean it's going to break, but what you're really looking for is if you went short for a gap fill, you have to get out there at that point. And obviously, if you got out there and you've seen the sideways to slightly up trading now going into the market, afternoon session, that's a worthwhile trade because it's actually a little higher than it was right at that piercing point right over here. So keep that in mind, folks. You got to understand your technicals in relation to it. And this is simple, just looking and analyzing the charts. And I know some of you guys might see, well, I wouldn't necessarily see these two lines here and know to connect them. That just takes time. Just takes time to learn that. That's why we teach our webinars that you can find at InTheMoneyStocks.com. We have one on January 3rd. We're going to go in through all this stuff, how to do it. We're going to practice it over and over again until you guys get it. All right, that's what it comes down to. In addition, the Research Center supplies all this information on a daily basis that I go over, and you'll eventually catch on as well. Now, a couple other things, folks, I want to look at today. Number one, Amazon.com came out today and said our sales were the best that they've ever been. Best they've ever been. Look at the gap up in Amazon. But really, it was a gap in what we call a gap in crap, where it gaps up and it never goes any higher, and you come down, bear flag, note the bear flag, note the fall. So again, guys, I want to stress this. If you're shorting on a breakdown of this bear flag, where are you going to cover? 20 moving average. Simple. All right? And then notice the bear flag position again, where you're going to short on a breakdown below that. You can even go to the trend line resistance support right there, where you draw that in below the lows, and that connects right here, and you can see you bounced off of it there, but then the next candle broke. Once you confirm through that low, you can actually go short right into a cross necktie of support right here, 20 in the 50, 200 in the 50 moving average, major support. That's your cover line as well on a short. Also note it's coming right into a gap fill. Never quite got there today on Amazon, but it's close. It's within 30 cents. So it might go down and dip into this area right down here to fill that gap, but that should be good support as well on that area. Okay, guys? So a couple odds and ends I just want to be pointing out in this video today when you're dealing with stuff. The other thing I would like to look at, guys, is the daily chart. Now let's go to the daily SPY. What you've been seeing here is just kind of a jumble of trading, and I can't go into this much because this is more for our research center guys, where we project against what's going to happen in Monday's trading, what's going to happen in next Tuesday, Wednesday, Thursday, etc. Thursday's New Year's, so it's going to be closed, and then the following into New Year's, the new year in January, where the market's going to go, and we're going to release key turn dates coming up over the next few videos. But nonetheless, you can see that you've just been trading sideways. I mean, if you really want to step up, and you can see that's what you've been doing. But the question is, where are you going to go? Are you going to break out to the upside like this? All right? Are you going to break out to that area? Are you going to break down? Are you going to go revisit the double bottom lows? All right? What are the stochastics telling us? What are the MACD telling us? What's the RSI telling us? Does that even matter? What are the calculations showing us on Fibonacci? This is all stuff that you got to be paying attention to as a technical trader, because let's face it, the fundamentals won't work. The fundamentals don't work. Look at anything. Look at Bear Stearns. A year ago, Bear Stearns had a balance sheet that looked much, much better, and now it doesn't even exist. Look at Morgan Stanley. Look at any of these. All these players out there. A year ago looked fine. What's the company today with that looks great that in a year from now will not exist, or will be bankrupt, or will be taken over for pennies, taken under for pennies on the dollar? That's the key, folks. That's what you got to be aware of. And that's what we try to find out, and we will project that, obviously, and continue to analyze it. Just a couple of notes. You have oil trading up today on the day. Oil trading up about $1 right now. Was up about $2 earlier, has come down. The oil spot trade closes shortly in about 8 minutes. It'll be an interesting trade into the next few weeks. We obviously are going to give our projections about a possible turn date on that as well in the Research Center, so join up at inthemoneystocks.com. Gold today up a little bit, about $20 higher, which is actually a nice gain. And the UUP, which is the dollar index, is trading down about 15 cents. Really been in a sideways motion as well on the UUP chart, which indicates the dollar. All right, folks, that's about all for today. Let's do one more check of the markets here, and I can see right now the NASDAQ has actually flipped to the positive side, but it's only up fractionally, up 0.18, and the Dow is now up 21 points, the S&P up 4 points, and again, guys, it's all about the technicals. Come learn at inthemoneystocks.com, and we'll continue with our intraday videos and continue to help you guys learn how to tell what the intraday moves are going to be, look for supports and resistances, and key trend line moves. Have a wonderful weekend, guys. We'll talk to you next Monday in the intraday video. Take care.